Hello folks, welcome back to a new episode. RALLYTOP Investing here. In today's episode, I want to show you one of my favorite signature trade setups. This setup occurs in the market most of the time. Now, I use the 4H as a higher time frame to find the pattern I want to show to you now, and then the 15 minutes time frame to take my entries. You can actually replicate this using any time frame. It's just that you have to know the time frame combo that you must apply to get the best out of this methodology. For example, if you are a day trader, you can use the 15M as your higher time frame and the 1M as your entry time frame, or you use the 1H as your higher time frame and the 5M as your entry time frame, or you use the 4H just the way I'm using it here now as your higher time frame, and then you use the 15M as your entry time frame. You need to observe this time frame combo because it's going to align properly when you are using this strategy. So what is this strategy about? Well, it is going to be on the 4H like I said, and you want to wait for a sweep of the 4H. I'm going to show you that on the live chat when we get there. What do I mean by a sweep of the 4H? Now, you need to look for a swing high or low on the 4H. Once that swing high or low is taken out by a candle sweep, that's your setup. Okay? I'm going to show you all of that. Now, maybe you don't understand what I mean by a swing high or a swing low. When we get to the chart, I'm going to show you all of that. So I just want you to have an idea, first of all, using these diagrams before you. Now, so once price takes out a swing high or low with a candle wick, that is your setup. What I mean is this. For instance, this is a structure point. Here, if you find a swing low here, and price pulls back up and comes back down to take out that swing low with a candle wick, and then try to go back up to take out the high, the swing high that produced that sweep. Once it takes it out, now when price is coming back down, any valid order flow that is left between the swing high here where it broke structure and this sweep here, that will become your entry. This is my signature trade. Whether I use it on the 4H or the 1H or the 15M, concept is just the same thing. So now, once price comes back down, this is your entry zone. But remember that this is on the 4H, and you don't want to take your entries from the 4H. So you need to mark out this area of interest on the 4H. Once price taps into this area of interest, you can go down to your lower time frame. In this case, the 15M. Number one, you can refine this zone here on the 4H on your 15M. Once you refine, you want to see this exact same pattern play out again on the 15M. Okay? Now, let me say one more thing here. You are not going to be waiting for any inducement. Why is it? Well, the reason why you don't want to wait for any inducement is that liquidity has already been taken here. When it swept this structure low here, this swing low here, price swept it with the candle wick. So you don't need to wait for any other inducement. Once this smart money has taken liquidity here, you don't need to wait for any other inducement, because inducement is a form of liquidity. Okay? The same thing when you get to your entry time frame. Once price has swept this liquidity here and is coming back down, now this zone will become your entry. So you can take your trade directly from here. I want you to know that when you get to your lower time frame, you may not actually find this exact same picture that you are seeing here. Why? Because the market is dynamic. Now, I want you to know that trading is not exact science. You need to understand the story of the market and bring logic to your entry. Okay? So when you look at this chart here, this pattern, don't go to your lower time frame and want to find exact same pattern all the time. It may not occur exact same pattern all the time, but is going to give you exact same thing if you follow it properly on your lower time frame. That's what I want to tell you. So this is what you want to find on your entry time frame. And once you find this, pull the trigger without any hesitation. We are not saying that it's going to be 100% guaranteed that you will win. But if you continuously stick to your trading plan, you will come out in flying colors at the end of the day. So that is my signature trade setup. It's one of my signature trade setups. It's my favorite. So I want to take you to the live chart now and begin to show you some examples so that you can know how to apply them in real time. Now take a look at this. First of all, look at it. Is this market bullish or bearish? As you can see, it is bullish because the last point is here when it took out this high, even though it took it out with a candle wick. Okay, but if you look at this one now, it took out this high here. It took out this high here with a candle closure and printed this higher high. This is your last higher low before this higher high, and price pulled back and went back up. It took out this one with a candle wick. So your last valid higher low is still here. Now, let me tell you what to do here. Remember the pattern I showed to you? I said you need this. Let me show that here again so you can understand. Look at from this high now. Price printed this low and went up. Came back down to print this low. Went up. Came back down to print this low before going higher. Okay? So this is the pattern I showed you before. And therefore, price swept this swing low right there. What I mean by a swing low is this one here. Your swing low is the candle that produces the lowest low. And the two candles on either side of that candle that produce the lowest low has higher lows compared to the middle candle that has the lowest low. And as you can see, the candle to the left here has a higher low compared to this low here. And the candle to the right has a higher low compared to the low here. So this is a swing low. That's what I mean by a swing low or a swing high. It's the same thing when you're talking about a swing high. For example, let me show you what I mean by a swing high. Look at this. Look at this candle here, this one. Okay? This candle is printed the highest high here. Now, the candle by the left of this candle that produced the highest high has a lower high, and the candle by the right also has a lower high. So this high, this middle candle that produced the highest high, that's a swing high. Okay, so that's what I mean by a swing high or a swing low. Now, as you can see, this candle took out this swing low with a candle wick. Can you see that? So after taking out with a candle wick, price went ahead upward to break this high. This high is the high that produced the candle that took out that swing low with a candle wick. So now when price is coming back lower, where is your area of interest here? Remember, you don't want to wait for inducement again because already liquidity has been taken here. So you don't want to wait for any inducement again. So what you have here is that you need to mark out your order flow. First of all, is your order flow. If all the order flows have been mitigated, then you resort to using the OB. Your OB comes as a last resort, not as a first point of interest. Okay? So now, where is your area of interest here? That's your order flow. You don't need to wait for any inducement because liquidity has already been taken here. So this is your 4H order flow. Now, let me take out price from here so we can understand what exactly we are doing. So the first time price touch on this is here. Let me take it from here. From here. So that's the first time price tapped into this zone. Like I said, you can go down to the lower time frame to refine the zone, and that's what we want to do now. And so this is the zone. So we want to refine it. Look at it carefully, guys. This is the last sell momentum before the push up that led to this break of structure here. Okay? So this becomes your refined zone. So that's your refined zone. So we are going to work with this refined zone because, as you can see, there's a massive fair value gap here. This massive candle produced this large fair value gap. Okay, and that's what we want to see within our entry zone. So you can knock out this and work with this one. So we stretch it out. It's as simple as that. So you're going to be waiting for price to come and tap into this for you to go long. So that's our refinement. Now we get back to that 4H. Now that we have refined our zone, remember it touched before, but we refined it to this and we took out the earlier the 4H zone. This is our refined zone on the 15 minutes. So we are waiting for price to come and tap into it, and then we can now go to our 15M and see what happens. Okay, so price has tapped into this zone now, so we can get to the 15M and wait to see what happens. So that's our 15M. So let's see. Now, on the 15M, you want to look for chalk. Okay? Like I said to you when I was explaining the diagram, you want to look for chalk. And so where is the chalk here? Well, the chalk here is this one here. Wait for it to take it out. And so we continue. Okay. Has it taken it out? No, that's not taking it out. We want to see this point taken out with a candle closure, that is. Not with a candle wick, with a candle closure. Okay? So let's see. Okay, so now it has taken it out with a candle closure. So where is your area of interest here? Well, if you want to mark your area of interest, this is your larger area of interest because your order flow comes first. It comes first of all. This is your order flow. Okay? So if you want to refine this order flow, then you need to use the OB. If this order flow is too large, as it is, for me, a 15 minutes order flow is too large for me. So if you want to refine it, if you so desire, otherwise you leave it at this 15 minutes and take your trade from there directly. Otherwise, if you want to refine it, then you need to refine to this OB here. As you can see, there is a fair value gap there. So that's a refinement of this block here. So let's continue to see what happens. Let's continue to see. Remember the processes we have gone through. We have double confirmation here. So if price comes back and tap into this thing, we want to go long from there. This refined zone. So let's continue. But if you also desire to take your trade from this larger block, you can. Why not? You can. But for me, I can refine it to this one and see whether it can tap into this one and give me a better risk to reward. So let's continue. So now it has tapped into this place. So you could have taken your trade directly from here. So we continue. Look at all these equal lows here and all that. It shows to you that price is likely to come and take out this equal lows. Let me show that to you. Look at this. All these equal lows here, they are not there for fun. The smart money knows what they are doing. Can you see that? So price is likely to come and take out this equal lows and then come to this one. That's my idea. So can you see that it took out this equal lows here? And I'm still expecting price to come to this zone. Look at it. See how it took it out with a candle wick? So I'm still thinking, if it doesn't come to me, no problems. I'll look for another trade setup. So we continue. Okay, so price has tapped into that our zone now. Let's see. Is it going to go higher? Where is going to be our target? First of all, let's get back to that 4H. Let me see the target we can target first. Okay, it has come to that refined zone, as you can see. So we want to see the target. First of all, as price is going higher, this will be our first zone that we target. That's going to be our first zone we target. All right. Then after this first zone, we can target this one again. Second TP that we can target this one. Now the third one is this one, guys. This is the third one. Okay, you can go on, and this is the ultimate target. This one here. No, this one is the ultimate target, but we don't want to hold our trade for that long there, but I'm just showing to you. So now let's get back to the 15M. So this is our ultimate, the first target, second target, and then third target. Okay, so we can frame the trade here to go long. Let's see. So that's going to be our first target, where stop loss just below here, give a buffer. Okay, so that's going to give us a 6.48 hour. Okay, that's our first target. If it goes our way, it's going to give us that much. So let's continue to play price. Okay, boom. So first target achieved. Now, once this first target is achieved, you can move your stop loss to break even, to be in a risk-free trade. And then we are going to wait for this second target to be met. So our second target, if we move to this second target, it's going to give us 8.69 hour. That's a decent trade, guys. That's very decent. So we continue. So remember, we are now in a risk-free trade. If you move, boom. So our second target achieved, and even the third target has been achieved. Can you see that, guys? Simple and straightforward. Can you see that? So the third target has been achieved, and it has given us how many? 10.13 hour. This crazy. This crazy, guys. That's how to do it. That's the first example. Now let me take you through another example so you can understand what we mean. This is another example. Let me just show you what happens here so that you can understand. From this high, look at the price printed this low and pull back, came back down, printed this low and pull back. This high is higher than this previous candle's high. Okay, and then came back down. Look at what has happened here. Can you see that? So this is price took out this swing low here with a candle wick, as you can see. Okay, so that's what you want to see in the market. Once you find that swing low, that's your setup. This swing low here, look at the way price took out this swing low. When it took it out with a candle wick, that's your trade setup. On the 4H, you want to see this. That's your trade setup. So once you find that, you will need to wait for price to come and take out this high, this very high. This is your swing high. So you need to wait for price to come and take out that swing high. So let's continue to advance price and see. Okay, so as you can see, price took it out with a candle closure. And now once that happens, you want to, let me take out price from here so that you can understand exactly what I'm talking about. So now, price took it out with a candle closure. Where is your area of interest here? I said focus first of all on order flow. Order flow, until that order flow is mitigated before you can use the order block as your last resort. So this is our order flow here. Very simple. This is my signature trade every day I look forward to. Okay, so now you have this zone. You can actually get to the 15M. If you desire, this zone is too large, get to the 15M and refine the zone. So let's see whether we can refine the zone on the 15M. So this is the 15M. First of all, start from the below here. Where can you refine? Now remember, this is where it took out this previous structure low with a candle wick. This wick that you're seeing is a zone by itself, but that's not what we're talking about now. We just want to refine the zone. The last sell before this push up that leads to this break of structure. So you can actually refine it to this one here, this last zone here. You can refine it to this. But if you are going to be refining it to this, because if you can see every other zone, I mean every other flow has been mitigated, only this is the unmitigated one. But remember, this in itself is a zone. Always, that's what I forgot to tell you at first. Always place your stop loss just below here like this to be on the safe side. Can you not leave your stop loss here? You can, but that's risky, because look at this zone here, this wick here, price can come to it. So to be on the safe side, just put your stop loss below that low. Okay, just at that low like that. That's your stop loss. So that's the zone we want to take, slightly smaller than the 4H zone. So we can take out this 4H zone. We can take it out now and make use of this one. So let's get back to the 4H, and then, so this is the zone we are targeting now. If price comes into this zone, then we want to take our trade from there. Simple. We have refined. Remember, we have only refined. We have not done anything on the lower time frame just yet, until price taps into this before we go to the lower time frame and see what we can do about it. So let's continue. Okay, so price has come into this zone now. So what do? Before we go to the lower time frame, let's identify our target. This is going to be your target. After this, you can now move your stop loss, to break even, and begin to trail your stops. So now we can get back to the 15M. So this is the 15M now. So price has entered into this point. This is the low. Where is our chalk here? Well, our chalk here is this one. If price takes out this zone, if price takes it out, then we can look for a trade entry. But for now, that's where we're targeting. So let's continue to play price and see what happens. Okay, so it didn't take out that and printed a new low. For this new low, we need chalk. So our chalk can be moved from here. Look at this high. This high is higher than this previous candle's high. Okay, so that becomes your new chalk. You need to wait for it to be taken out. This chalk has to be taken out before we can take any decision in the market. So let's continue. Okay, so we have a new low here. For this new low, we need chalk. And as you can see, chalk was taken out here. We have gone too far. This is your chalk in the market. Okay, chalk was taken out, but with a candle wick. We don't need candle wick. We need closure. Okay, now look at it. It printed a new low. For this new low, where is your new chalk here? Your new chalk is here now. Remember, this very chalk was not taken out with a candle body. It was with a candle wick. So now this is our new chalk. If it takes it out with a candle closure, then we now know what to do. Let's continue. Okay, so it has taken it out with a candle closure, as you can see. So where is our area of interest here? First of all, I told you, focus on order flow. And where is the order flow here? This one. From this high to this low is your order flow. Okay, you can place it here. Your stop loss there. Simple. That's where you want to see. If price come back into this zone, we want to take price higher. Now, as you can see, we have double confirmation here now. So we can continue to play price. Okay, let's see. So price is going. We can frame this trade. Let's frame it first of all, guys. So our target is here. Let's take it there. That's our target. The stop loss to be here. That's the stop loss there. Okay, so that's our stop loss. So this is the where is the target? Did we miss anything? No, the target is here. This is the target. Okay, that's a decent trade if it goes our way. So we now continue to play price and see what happens. Okay, boom. Can you see that? Straight to our target. Straight to our target. All right, simple trade setup. This is my signature trade setup. Every day I look forward to this kind of setups. Once I find it in the market, I go for it. I do not hesitate. Just don't take my word for it. Go back on your chart using the 4H candle sweep. Once you find a sweep of the structure high or low on the 4H, go down to your entry time frame, which is the 15M in this instance, and wait for chalk and then take your trade from there. Simple. It's a simple trade setup. Okay? Before you go, if you are new to our channel, please consider subscribing right away and turn on the notification so that when we publish a new video, you'll be notified about it. And right now, our doors are still open for those who want to move their trading to the next level by joining our VIP community to learn. You want to step into 2025 as a knowledgeable and professional trader who knows how to really read the moves of the market and make consistent profit. Okay, that should be your goal in 2025. I will leave the link in the description so that you can take advantage of it. All right, guys, thanks for listening, and I see you in our next video.